See, with tension rising in the Middle East, defense stocks are back in focus. They never went out of focus, I would say. But now the important thing is that the outlook for the defense companies remains strong. And given the geopolitical crisis that we are seeing across the globe, whether it is Pakistan, Afghanistan, whether it is Ukraine, Russia, whether it is now Middle East and some other parts of the country, of the world, the demand for defense equipments, ammunitions is going to remain high, right? So that puts out a good growth outlook for these companies, including specifically the Indian defense companies, which have started to experiment in the export markets as well. Now, the question as an investor that you have to ask that are you only chasing growth, or are you also fundamentally focusing on valuation parameters as well? Because you are focusing on returns. And returns have two components. One is obviously the basic growth of the earnings, but also at what price you are buying these earnings, right? So if you overpay, then you may not have high returns while the companies continue to even have a decent growth, right? So to that extent, we believe that you have to focus on both aspects and not only carried away by the narrative. The second point that becomes important is that in the whole this defense crisis, you have to understand that the focus is not only on the war, but the focus is also on securing the critical resources. Now, whether it is crude or rare earth metals and so on, and the other focus is on trade routes, right? So the defense has to be seen in a more broader concepts, and you have to identify companies which are critically important from a geostrategic viewpoint, whether they are financing institutions, they are logistic companies, or they are companies which can provide critical resources to run your economy.